We are back with episode 19 of Container Bytes. Jude, a nice shirt. Thanks for showing up today.
Thank you. It's my podcast shirt.
I like it. Cool. So we're going to jump right in here. Lunar New Year. We shared some data a couple of weeks ago about what a typical progression looks like. February 11th, when we're recording this, that usually means that just with Lunar New Year a couple of days away, everything is basically slowing down. Judah, what is the Lunar New Year gear up or gear down, I don't know, looking like right now for ocean freight?
Yeah, so Lunar New Year starts February 17th this year. But as you said, usually about a week before, you start to see a slowdown in manufacturing and logistics because a lot of the labor force takes off for the holiday. And that's what we're starting to see now. We're starting to see that in rates. So if we start with Asia, Europe, rates are down to about $2,400 per container. A couple of weeks ago, they were at 3,000. Mediterranean down to 3,600. That was as high as 4,800. So we're definitely seeing that seasonal slowdown after that initial rush. But rates are still relatively high. And what normally happens is rates increase ahead of the holiday. As the holiday starts, they kind of decrease, but then usually plateau and will stay at that relatively elevated level until after the holiday, because there's usually a backlog because things have been shut down. So there's an eagerness to move goods that need to be moved right away. And so that's probably what we're seeing for Asia, Europe, and the carriers are announcing GRIs for the start of March, which seems to say that they're anticipating that there'll be some demand there.
That should be, remind me, that should be like the last of the air cargo rate increases, right? You kind of like typically see a bump in the beginning of March, and then April, June starts to slow down a little bit, and that keeps you until peak season build up, right?
Exactly. So you have Lunar New Year, then you usually have a lull until peak season gets started.
Yeah. This is potentially the first episode this year where there hasn't been some major significant geopolitical change that is impacting global freight, and that's kind of nice. That doesn't mean seas have necessarily been calm. There were a lot of storms and a lot of rough sailing that hit West Europe and the Mediterranean last week. What has the fallout from that been?
Yeah, so there's definitely been some winter storms that have made transiting of vessels through the Atlantic off the coast of France and Spain very difficult. There were ports in the Western Mediterranean that have actually shut down for several days. They opened again early in the week and then shut again. But by midweek this week, there's really been smoother sailing and ports have reopened. Sailings have restarted, but we're going to see congestion and delays because of all the schedule disruptions that we've seen.
This is also something that always, maybe I'm just like so deeply traumatized from the COVID period, that when everything was operating at max, these types of disruptions could really end up having an outsized impact, right? Because you're already like pushed beyond the point to repair, and then you have a port shut down for a day or two, and it just like puts you way, way, way far off. But right now, it's a little bit easier to bounce back from these kind of relatively minor disruptions because there's just a little bit of slack in the system. Jumping away from Europe and back towards the Transpac, what are we seeing from a Lunar New Year perspective? What are ocean rates like on Transpac?
Yeah, so similarly, as Lunar New Year's approaching, we're kind of past that initial or that pre-Lunar New Year rush, but we're seeing a much sharper drop in rates. So rates fell back to about $1,900 per container, which is back where they were in early December. So that seems to indicate that they're not staying elevated, like we mentioned for Asia, Europe, and that maybe there's not the expectations of a backlog and some continued demand. And there have been reports that demand was actually relatively muted for that pre-Lunar New Year rush as well. And maybe that on Vaseline, we've already entered that, as you said, post-Lunar New Year pre-peak season slump.
Yes. If we step away a little bit from the Lunar New Year side and look at a more macro level on container rates as a whole, right? You just mentioned the double-digit decrease in rates right now. How much of what we're seeing in the market and in container rates is a function of vessel capacity growth right now, which we've talked about a lot, about how that's really driving rates down or has the potential to drive rates down, versus a function of demand changes for shippers?
So, certainly rates are going to increase and decrease with shifts in demand. And that's what we've seen now around Lunar New Year. We'll see it again around peak season. If there's tariff drama, we'll see that with front loading and things like that. But how high and how low rates are going to go right now are really a function of capacity. So even though there was actually strong volumes, there's volume growth globally in the market last year, for Q4, we're already seeing carriers report losses, certainly decreased revenue compared to the year prior. But Maersk and ONE both reported losses in Q4, which is the first quarter they've had losses in a long time. So that's what they're pointing to is capacity growth as the big driving factor in overall revenue levels because that means container rates are falling. And just in terms of the general kind of uncertainty that there is in the market, in that earnings report, Maersk said that their projections for the year for their earnings for 2026 could be either a profit of $1 billion or a loss of $1 billion, depending on what happens. And
Seems
so
like
I
a
think
pretty
it's
big,
mostly
seems like a pretty big difference.
yeah, it's mostly kind of related to what happens to the Red Sea, right? So if there's a return to the Red Sea, that's going to cause higher rates for a shorter period of time, but overall, it's going to mean a decrease in downward pressure on container rates because there's just going to be that much more capacity back in the market.
Awesome. And then I guess moving also before I mentioned fewer geopolitical issues, but similarly on a relationship level, Valentine's Day is around the corner. Are we seeing anything from an air cargo perspective mostly?
Yeah, terrific segue.
It
Yes,
was smooth, right? I think really smooth.
flower shipments are a big deal this time of year. For Valentine's Day, they usually start about at the end of January, and mostly from South America to North America and Europe. We're seeing that reflected in air cargo prices. So our Freightos Air Index shows that North America prices now are about $2.10 per kilo, and to Europe are almost at $2. So that's up 8% and 17% respectively compared to the end of January. So that points to an increase in demand. That means flowers are on their way.
And ladies and gentlemen, is the power of flowers. I've been working
And
on
with air
that.
cargo.
I've been working on that one. Okay, well, great. That is it for episode 19. We did just drop some really interesting research for large multinational importers, exporters, freight forwarders about this new concept that we're seeing pop up everywhere around mini tendering. So that rather than tendering once a year, being able to move with the punches, just like the stuff that we talked about today, and kind of shift towards more frequent rate refreshes. So head over to Freightos.com if you want to learn more about that. That's my plug for today. Judah, thank you very much. And a shout out to our producer, Pratik, who's been making these episodes pitch perfect. So thanks again, Pratik. See everybody next week.